where I'd love to start is just how did you get excited about crypto and blockchain? Why are you focusing on that right now in your practice?
Well, full disclosure to your friend in the legal space, to be rightfully concerned, I have no financial interest in this industry. I'm a former statewide official that wants to see this industry flourish and proliferate here in the great state of Texas, whether that's mining, whether that's crypto issuances, or bringing the best and brightest to our state. That's what I am for. And as a lawyer, now that I didn't win my race for top cop of the great state of Texas, I'm focused on keeping people out of jail. But in this particular industry, I'm really excited about it because it's created um, overnight fortunes and it's created a lot of wealth, but also a lot of investment opportunity. At the state land office, one of the things that a lot of Texans don't know is we manage 13 million acres, most of which is in deep West Texas, and a lot of the miners that we had a chance to meet, they say their two top line items are land and power, which we have in very cheap price points here in the state of Texas. So it's a very attractive place to do business. So I'm here really to promote the industry the best that I can. But as a lawyer, I think it's right, whether it's at the beginning of an ICO or an IPO process, to make sure that you have good counsel. And that's probably my strongest message to each and every one of you today is whether it's dealing with state regulators or federal regulators, make sure that you have good counsel. I'm obviously here to promote my firm. We have pretty good price points, but there's also some great law firms that are doing what they can. The tricky situation here, and as a lawyer, is that laws being created overnight. We have a divided Congress, right? A Republican House and a Democrat Senate. There was testimony received earlier today in the House Financial Services Committee on the debate as to whether or not CFTC or the SEC will have oversight over the over 9,000 cryptocurrencies that are currently public or that could be traded right now in the US. And so there's a lot of discussion that is yet to take place as to whether or not law will be formulated is one thing, but we do know that SEC Gensler and the CFTC head will be rushing to see who can be the strongest in terms of regulation, in terms of oversight. So my advice to you as well is, in addition to having a good lawyer, is making sure you have a good team or somebody that can help you around DC and just follow the pieces of testimony as they come before these committees and really get in the mind of SEC Gensler because he seems to change his mind. I was just reading a statement where he thought every single cryptocurrency currently issued is a commodity, except for Bitcoin, and Bitcoin should be traded more akin to a precious metal. Having said that, if you look at the SEC enforcement actions, he, for example, just deemed Kraken and its staking process to be a violation of securities laws. So, you know, it remains to be seen in terms of how the SEC defines securities and commodities and what role the CFTC currently plays. Roughly, the total market cap of the trillion that's traded in crypto is about 49% in Bitcoin itself. So, really the concern is going to come down to that other 50 plus percent. But from our law firm's perspective, what we're trying to do is try to give the best advice possible, anticipate regulatory action, and regardless of what part of the landscape you're in, whether you're a bank, whether you're a lender, whether you're an investor, a developer, a coder, it's time to buckle up. There's going to be a lot of pain ahead when it comes to regulation.
So besides trying to get in the mind of Gary Gensler, which I think a lot of people have tried and so far, failed to do, what are some more, actionable tips for folks here, whether they're investors or entrepreneurs, navigating kind of the regulatory environments of state and federal laws and regulatory bodies here in the United States?
Well, Texas has a unique system, and just to be clear, feds always have preemptive right over what a state like Texas has. But the state securities board here in Texas has said that as long as you are not trading in stablecoin, that you do not need to register for a money transmission license. I currently represent a brokerage house that believes that their money transmission license is being held up just because they offer a few stable coins on their platform, and it's less than a few basis points of what they currently trade here in Texas. They appear in all 50 states. It's a name you would recognize, but I have to keep my confidences. In terms of federal oversight, I would say that be careful with stable coins because of the Tether example. and another SEC enforcement action that's looking very closely at liquidity requirements for stable coins. So if you are an issue or related to a stable coin, I think that that's where we're going to see a lot more oversight, a lot more action from the SEC. And anything that's advertising itself as pegging to a currency has really upset SEC staff, thinking that the average investor indeed thinks it's stable, that there's enough liquidity, and that you can go and trade. And that's what will lead eventually, I think, to a definition of it being defined as a security. Going back to the days of the 20s when there were runs on banks, they want to be able to prevent those runs that we've seen on different types of stable coins when people are concerned that they can't get the money back for what they purchased stablecoin initially for.
Yeah. So, what are some of your thoughts on Tether, which today is the largest market cap stablecoin in the world?
Well, today's announcement, today alone was just, in this industry, pretty big day. I mean, Silvergate announced a bank out of San Diego that has most of its operations trading in crypto, announced that it was liquidating its bank and its holdings and redeeming as much resources as possible to its depositors. Based on that market action, Tether, I think, became by a significant margin now the largest traded stable coin. So even though the SEC came and fined them earlier last year on the fact that they essentially the allegation from the SEC is that they lied about their financials, and so in terms of one of the regulatory mechanisms that I think the SEC is going to start requiring, similar to exchanges, is that you have to submit third party institutional quality financial audited statements on a quarterly basis, and um, so Tether's a temporary beneficiary of what's happening with the Silvergate bank closure. But again, I go back to that as really the domino falling in terms of liquidity requirements that are going to be put on stable coins. Because if you're going to advertise yourself as the most stable type of crypto out there, but yet can't redeem, and you deceive the public potentially in your statements and in your marketing, that's going to be a red flag for any regulator. So Tether, has somehow convinced regulators, and a lot of I've seen of these companies have engaged Gensler staff and tried to be more forthright in terms of their operations to try to stay out of trouble. Um, and so, it remains to be seen. But last March's action was pretty clear, because I think the biggest stat was that roughly only a quarter of the reserves were available for investors that were able to redeem their holdings.
Yeah, I mean, it was even more than that. It was them admitting to the New York AG that they lied to the public about the fact that that wasn't the case. So perhaps Tether won't stay as the largest market cap stablecoin, but we've talked about stablecoins right now, and I'm just curious what are your thoughts on the future of stablecoins? Because clearly, as Alex has demonstrated earlier in his talk today, the demand for using blockchain and crypto is not to use a wildly volatile crypto asset to do something. It's to use the stable currency that so in the United States and in many parts of the world, the US dollar is that currency. So clearly the demand is to use dollars on a blockchain, but right now there's not a lot of great options like for that. How do you see that evolving over the coming years?
Yeah, I mean, I think obviously the market's bearish on a day like today, but I'm long term bullish, because there is value internationally for currency trading, and the fact that there's a double verification process that blockchain can offer, the reduction of abuse, fraud, mismanagement, as long as the disclosure requirements are there, stablecoin has a bright future internationally. And whether it's situations like in Ukraine or areas of deep geopolitical tension, the ability to be able to go cross border with lower fees, with taking the middleman out. I mean, that's the basis of the promise behind cryptocurrencies, right? Is more decentralization, less fees, less middlemen that are involved in intermediaries, to allow people to transact in a way that they can do in a secure fashion, peer to peer, rather than having tremendous government oversight that requires undue amount of compliance. So, if done the right way, it has, I think, tremendous potential.
So that's kind of the positive of what the future of using kind of blockchain looks like. So here's kind of a question on what I think many folks in the crypto world would view as negative. At Unbounded, we view this actually as a positive step. In our conversation last week, kind of mentioned, you know, we think that there's going to be more and more regulatory action, not just from the SEC, not just from the United States regulatory bodies, but around the world. And specifically, kind of, our question for you, and something we at Unbounded are always trying to get smarter on, and I think a lot of crypto investors are trying to understand, okay, what's the probability these major legal regulatory actions happen, and does this happen in 6 months? Does it happen in a few years? So always trying to speak with those in the legal profession on this. So the question is, like, do you anticipate governments being able to easily seize assets on chain in a similar process to how they seize assets in a bank account today? And to make the example more concrete, probably every day there's a government body that's seizing some type of money laundering funds, or drug dealer funds in a bank account, and that process is fairly straightforward. Go to a judge and you are able to say, okay, here's the proof that these funds were gotten illicitly, and then that gets seized. Um, right now, due to companies like Chainalysis, we know that there are many BTC Bitcoin wallets that have hundreds of millions of dollars plus for Al Qaeda, for ISIS, for Chinese fentanyl dealers. This isn't like a made up, oh, what if we find this? It's like the evidence is out there. Yet those funds are still, you know, available for these, nefarious folks. So will governments ever be able to seize those assets? And if so, how, compared to, their process now for bank accounts and more traditional ways of holding funds?
Well, in the U.S., I mean, there is the principle of civil asset forfeiture and criminal forfeiture. So, criminal forfeiture is when a governmental entity can seize assets um, subject to a criminal conviction. So, um, in the example of Al Qaeda and others, I will leave to individual cases as they progress, but law enforcement will tell you that they need it as a yet necessary tool to seize assets. And but internationally, I'm not aware of a body that works um, in a similar fashion to what we do domestically. Can we take on international actors that have assets in the U.S.? Absolutely, and seize those. But it's on the civil side, it's more of a deeper philosophical question that even our legislature deals with virtually every session, and that is the ability for law enforcement to seize assets when you haven't been convicted of a crime. And so there are civil libertarians. There are folks on both sides of the political spectrum that say, can governmental entities do this without criminal conviction? Um, and so in Texas, for example, they're trying to impose a cap in terms of how much, in terms of assets, can be seized without a criminal conviction, and at least some sort of tie into or evidentiary proceeding before a judge to do this. Usually it's run by county DAs. Now, at the federal level, I don't really have a lot of good news because the IRS is really gearing up in terms of oversight on crypto investing and crypto assets. There's a recent announcement that they are hiring, or the Department of Justice, 150 more prosecutors under a cybersecurity task force to do nothing but seize assets, um, civilly or through another mechanism known as administrative, non-judicial seizures as well.
Tell us about that. What's that?
So currently under federal law, the cap is $500,000. So the DOJ can basically, without going before a judge or trying a case or bringing indictments, can seize your assets based upon a short period of time in which they provide you notice. In some cases, it's less than 5 business days. And if there's not a response, and for a lot of folks, this is in the non-crypto, majority of these cases are non-crypto related, but these are convenience store owners. These are small business owners that have their life savings basically taken from them, or at least a judicial lien, and they can't hire a lawyer, somebody to defend them. And so, a lot of folks on both sides say this is an abuse of government oversight. So, I wish I had better news, but the IRS, the DOJ, the OCC, and others are hiring up staffs to be fully trained in this process, to include and have a specific focus on seizing crypto assets. So this is part of a larger movement, in addition to the SEC enforcement actions that we've talked about, the CFTC movements. Barring any congressional intervention here, I'm afraid to say that federal agencies can use the full extent of the law available to them.
So this starts to go a little more into the political and not just fully legal. But what are your thoughts on kind of that right balance of regulation for blockchain and crypto? How much civil asset forfeiture should there be? What limits should there be? As you said, there's people in Texas on really both sides of this. So specifically as it relates to crypto and blockchain, have we had enough regulation? Should we have less? Should we have a lot less of some that exist and a lot more of others? Just what are your kind of general thoughts on, if you were in a position to make that possible, perhaps what would you be doing?
Well, I mean, I tend to be concerned on the civil asset forfeiture side of things. I think if you are convicted of a crime, then law enforcement agencies should have full purview, certain to you can index it. For example, let's say instead of the 100 million you save sitting in a wallet, it's uh, let's say it's a million, and legislators agree on a percentage of what can be seized by a government agency. One other fact about asset forfeiture in the United States is that usually it's about 100% of those proceeds go to the agency that's seizing. So there's kind of a self-interested desire to do this, to seize and to increase your budget and look good. So I do have concerns on the civil side, and it's going to be interesting here in the legislature where we do put that cap and in what instances you can use it. But at least it's a first step to rein it in. Federally, again, I go back to just using existing law. So the U.S. Supreme Court, um, administered a case known as the Howey test, and basically it's a four-pronged test for defining what is a security and what is not. And if you are investing in a common enterprise to the public and offering that to the public in return for consideration for a profit, it's largely defined as a security. And so, I think between the SEC, the CFTC, they can handle most of this as long as Congress, comes to the table on a bipartisan basis to define these lines. But this whole idea of using regulatory bodies to do the job of Congress, it doesn't work in this area, and it shouldn't work in other areas as well.
Okay. Um, so in the crypto world, often the most valuable aspect of why people are investing and building in crypto is generally considered decentralization. So, for those of you that have been here, for today, there's a lot of different points of view on what decentralization is, what the value of it is, and I guess my question for you on this is, how would you define decentralization? Does that come up in your practice at all? And then just your thoughts on however you define it. Is it good? Is it bad? Is it sometimes good, sometimes bad?
No, I think that there's utility in peer-to-peer transactions, and that there are areas of the economy where the government doesn't have to have a role as long as people feel comfortable in verified transactions that we transact every single day through digital wallets or just traditional currency, fiat currency. I think the concern that I would have in terms of decentralization is when it becomes centralized. And how do we define that line? And is it in the form of exchanges or third party platforms that are allowing for the transactions to occur? Or is it as simple as just a dollar value or monetary value where we say government's not going to look, at those types of transactions? You'd mentioned, criminal activity and cross-border aspects to all this. That requires more partnerships internationally, I think, to undertake. But the principle of decentralization is very promising. And with the changing supply chains that we have in our world, and um, the closeness in which we're transacting, this facilitates it and makes it much more efficient, and reduces fees. By the way, like the last presentation, at a thousandth the price of what a traditional brokerage house. And my fear also is that you know if we condemn this industry too much, there won't be innovation on the blockchain side of things, financial ledgering and verification of payments, and the rails that will allow for financial transactions to move forward and more efficiently. We can't allow for legislators to punish the industry writ large. So, typically this is what happens, right? Whether it's Madoff, from a few years ago, or Enron. I'm dating myself when I was a young lawyer. Government tends to overcompensate and overregulate during in the tailwind of crisis, probably to score some political points, but also to show constituents that they're trying to do something, but often punish the industry that they're trying to work with.
Yeah. So in that vein, we've seen a lot of folks from the crypto industry argue that uh, that's what we're doing right now. We're overcompensating. And a lot of that's happening at the federal level. And what some of these folks argue is that it's pushing a lot of founders or even just like their entities or their businesses abroad. Um, do you see a way to kind of rein that back in, or that is that likely to happen? And then even if at the federal level it keeps on increasing, is there a way for some less regulated states like Texas, for example, to potentially still attract those builders, even if at the federal level there's maybe a little bit of a tension?
Yeah, to me, it's all about engagement. I mean, if there's one thing I've learned through 5 legislative sessions here in Austin is that, especially here in Texas, because we have a citizen legislature that meets once every other year, and I don't believe we have one crypto professional in a House of 150 and 31 in the Senate, and probably a limited amount in key executive agencies that regulate um, the industry. So to me, it's engagement here in Austin, but also in DC. There is the Blockchain Association that lobbies on both sides of the political spectrum, both in the House and the Senate. They're the ones that are presenting and being um, uh, really forthright in terms of proposing good legislation that helps define the philosophical balances that we're talking that I've had a chance to review and are very reasonable and a good first step for a regulatory regime for the industry. So I know I'm asking a lot of you to go up to Washington D.C. or to join a new trade association, but you have to think of it from a legislator or regulatory standpoint. Very few of us actually have this background. We need to be educated on it, and usually that's how good policy can be produced, not from a war of words or letters or enforcement actions, which right now that rhetoric is ratcheting up. Now, having said all this, you see Brian Armstrong, a fellow Rice alum, the founder of Coinbase, that was on CNBC, and he said, "Look, I sit down with Gensler whenever he'll take my meeting with his staff, and we're just trying to work on good policy and make the sausage happen. It's better if you engage it and are part of that process rather than sit reflexively back and be you know punished in an unduly way."
Hello. Thank you so much for your very informative and insightful conversation. My question to you is recently there have been some states, like Texas among them, but others as well, that have looked at the making gold and silver legal tender. And to that, point, to Alex's point about the need for a digital dollar for ease of commerce, ease of transaction. Aside from legislative motive, what would you see as maybe an obstacle to Texas issuing like a Texas dollar, maybe using the BSV blockchain for scalability?
I think the idea definitely has merit. The governor was in support of the idea of issuing a digital dollar. You had mentioned the gold bullion deposit that's actually being built here in Central Texas as we speak, which could very well back it, and that would be, a stable coin in its own right. When with the right, we'll see what regulatory requirements are for new coins, but it would definitely have merit. The amazing thing about our state is we've got arguably the best balance sheet you'll find in our union. I know Mayor Suarez disagrees with me out of Miami, uh, but we do have a $32 billion budget surplus just in this legislative session. Our rainy day fund is close to a statutory cap of, I think it's like 13 billion. Our endowments that support UT and A&M are at 43 billion. An endowment that supports K through 12 education that I used to manage is at 43 billion. So, and most of the independent school districts and public entities in Texas that are issuing debt or borrow are at AAA credit rating. So, if there's a state that can do it, it would be us. And I think a lot of people in this room would be buyers.
Thanks for your time. Appreciate it. My question is, it's often very confusing for Bitcoin entrepreneurs. We talk about federal regulation, but the SEC, the DOJ, the OCC, they can't even agree, right? We've got the CFTC, FINRA, and I've seen this personally with state banks trying to get charters that were like Anchorage Bank got one, then it was revoked. Avanti Custodia was told yes and then denied. So I guess my question is, it's not really clear to me who to go to get permission, because one branch will say yes, the other will say no, and then I don't even know if they can't agree, how can we figure out how to do it and comply with the law?
That's what makes it so challenging, both really as a lawyer, as an investor, as an entrepreneur. Because I mentioned my prior client that's going through the same issue. Their application has been held up for months. And I know in other states with same timelines, they've been approved within a few months. At the federal level, I will caution the audience by saying that in January, it was the OCC, the FDIC, and the SEC that co-authored a letter to banks, national NAs, associations, advising them to stay away from holding or setting up custodian accounts for crypto. I think with the Silvergate closure or liquidation earlier today, that momentum will only continue. So I think you're right in looking at state banking laws. The Texas Banking Division, which is subject to the oversight of the Texas Finance Commission, is very easy to work with. Usually staff can give you an answer fairly quickly. I will say, however, on money transmission licenses, which are required if you do hold any kind of crypto, those applications are being held up because they're waiting to see what the Fed does. So my only counsel to you is make sure you have a good counselor that's following both levels so that you can find the more advantageous regulatory regime that's more beneficial to you at the banking level.
This is very off topic, but at what point in your life did you realize you're going to have to put the P in your name? Early on, the actor Michael B. Jordan. I think at some point he was like, here we go.
I can only be told, yeah, right, my name's Hillary Clinton. So I had to, getting through TSAs has always been a challenge with the name George Bush, or ordering a pizza over the phone. It's kind of harder than it sounds. So throwing in that middle initial is important.
Okay, we got time for one more question here.
Hook 'em horns, by the way. Yes, sir.
Okay, banana suit. Brett, I guess you got the.
I guess I'll ask a question of everybody. So, my question is about Tether or stablecoins in general. Tether claims they're a Hong Kong company and/or maybe a Swiss company, and it's unclear. Like they've not even said or shown what that even means, but they're issuing billions of dollars of what is essentially a dollar, and they're essentially adding inflation of dollars as like a private entity. It's like a guaranteed note for more dollars. And I wonder how does a U.S. I mean, even the FBI or whoever would go, kick the door down when it's unclear where the door is or any of that. Like how do we get to the point where we can even start to enforce something like that when we don't know who the executives are or where they are or where the headquarters are or whose jurisdiction would even prosecute, but tons of Americans are using the product? What does that look like in your opinion?
Yeah, I mean, it comes down to assets. And as long as the asset touches U.S. shores or U.S. accounts, then there's grounds for action. And in terms of beyond that and actually finding, little known executives, that comes down to finding jurisdictions in which we have an extradition treaty when it comes down to it. And so will it rise to that level, with respect to an issuer out there? It remains to be seen. As you know, a lot of this is sometimes driven by imagery and making sure that we're getting the bad guy. But I think Gensler's moves right now are just to shoot a bullet across the bow and just say to new issuers, think about registering as a registered security before the SEC. Be extra safe. Yes, it's extra compliance costs, but to answer your question, it's just going to come down to, is there exposure to the U.S. markets now? And that's the limitation that we have, is that this is a globally traded industry. So, how do we work with the EU and their financial networks, with Interpol? How do we work in Latin America and have better criminal oversight? But that invokes a different type of activity. If we're talking about criminal activity, then we have much more leverage at our disposal. I'd probably want to refer to my friend Hector Valle here as a former federal prosecutor, so he probably could answer the question a little bit better than I could.
Well, George, thank you so much for coming up here, answering the audience questions, having a chat with me. It was a pleasure.